With the stock market fluctuating what seems like more than ever, it's a tough time perhaps for many to navigate how they move their money in the market and how to maintain their financial base and continue to build on their retirement. Joining us now to help us clear some of the confusion and strategize for the future is Jason Brown, options trader and stock market coach with the Brown Report. Jason, thanks for joining us.
Tyler, thanks for having me.
Appreciate having you on. So it seems with what we're dealing with economically right now, particularly with regard to inflation, that the markets are kind of jumping and dipping back and forth, probably at a greater pace than we're used to, even when we're at a point where we're looking at potentially a recession at some point in the near future. With that being said, there seems to be two modes of thought. Some people say now's the time to maybe, cut your losses, dip out of the market a little bit and wait for things to level off before you continue to invest, while others are saying prices are low, get in now, it's bound to rebound at some point, and you could be making significant gains in the market by entering now. As someone that is dealing with people's coaching people through the market, where do you stand on this issue at this time?
Yeah, so thanks for the question. Again, thanks for having me on. I think people have to understand what type of investor or trader they are, and those are two separate things. So if you're a long-term investor, statistics and history shows that long-term the market goes up. You can take the real estate crash, you can take people flying planes into a building in 9/11. You pick any incident, trade war with China, we eventually came out of it and went higher. So if you are a long-term investor, then almost every day is a good day to buy, especially when there's a sell-off, because long-term studies have shown that the overall market goes higher. However, if you're a trader, though, what's beautiful about being a trader or trading options, and most people don't know this, is that you can make money from stocks falling. And so the way that we coach and teach is we don't have to just put money away and wait for 20 years for the market to rebound. We can actually make more money from stocks falling because stocks fall faster than they rise. And so my insight would be, number one, know which game you're playing. If you're playing the long-term game, then great time to pick some stuff up at a discount. If you're playing the short-term game, you don't, or even the medium-term game, or even if you're playing the long-term game, but you're scared about how that's affecting your portfolio at the time, you don't have to stick your head in the sand like an ostrich. There are strategies that you can do to A, protect your portfolio, and B, actually make money from stocks coming down.
And there have been some cases too where people, as you said, take that short-term game as kind of a way to put some more money in their pocket, maybe get out from behind some of their bills or some of their debts, and put themselves at a better financial standing so that they can focus on their financial future. From my perspective, I see that as a risky game to be playing, but for some people, it is their best move. Where do you stand on that, and how do you coach people through whether or not that's a smart decision for them to make financially, to play the short game and play an aggressive game, especially in this market?
Yeah, well, you used a very interesting word, which is that seems risky. And I think throughout history, we've been taught if you can make money quickly, that's risky. But it's really not risky. It's more about knowing how to do it. And so some people look at the stock market as a high stakes craps table, and like, okay, I'm going to gamble today and see if I can make some money. But let me give you an example. Yesterday, I literally made $20,000 in the span of about 1 hour. There was no gamble. There was risk because there's always risk in the market because you're never 100% sure that the trade is going to pan out. But the way that I teach people, it's like the weatherman. The stock market is like being a weatherman reader. There are signs that tell you there's an 80% chance it's going to rain. It's a 90% chance it's going to rain. When you take that 80%, 90% chance that the weatherman tells you, you don't say, well, I'm going to wear shorts and bring my beach towel. You say, it's a high probability it's going to rain. I'm going to grab an umbrella. And so that's what we teach people, is that we look for the 80, 90% chance that it's going to rain, or that means stocks are going to fall, or we look for the 80, 90% chance that stocks are going to rise. And that's when we take that short-term shot. And so it's more about probability and statistics, taking that at the most highly probable time. Now, there'll never be now with the weather, it could be 100% chance it's going to rain, but have they ever said it's 100% chance it's going to rain and it didn't rain? Same with the stock market. There will never be 100% like this is the time, buy or sell right now. But you can enter with about an 80%, 90% confidence level when you learn certain chart setups and you learn what the market does when it's about to sell off, the same way we learn what the clouds do just before it's about to rain.
As you're coaching people through the short game, especially if they're in a situation where maybe they don't have as significant of a financial base to really go at the market in that kind of a way, or really be able to undertake so much of the risk that is associated with that, even as they calculate it and go at it strategically with someone that is in the know, like yourself, Jason. How do you navigate that with your customers, with your clients, to teach them how to ease their way in that sense without putting themselves in a position that could potentially be of even greater loss to them given their financial standing?
Yeah, and that's a great question. Last thing we want anyone to do is to hear something like this and kind of take their life savings or the little that they have left and just say, I'm going to try this. That's not the mindset that you want to have if you're going to get into this game. So, what we teach people is that you don't have to have any money to do this. Now, you might be like, okay, what is this guy talking about? Because we teach people to practice paper trading first. So, once you get the knowledge, the coaching, and train on how to do this, it was kind of like a pilot. We put you on a simulator and say, here's a fake account, but it's going to simulate the real market. And so I want you to practice getting in and getting out at those 70, 80, 90% chance levels that we talked about. And we're going to practice with fake money. We say once you're right 7 out of 10 times. So if you take 10 trades and you're right 7 out of 10, then you're ready for real money. Or once you're net profitable, you're ready for money, which means let's just say you take 10 shots and you're wrong 7 times, but you lose $100 7 times, but on time 8, 9, and 10, you make $1,000. So you make $3,000 3 times, but you lose 700 because you lose 7 times. You may have lost more than you won, but you lost small, but you won big and you're net profitable. And that's the name of the game. You'll never be 100% profitable every trade that you take. It's just not the industry that we play in. And so it's about net profitable or being right more times than you're wrong. If you can follow that, you put the odds in your favor of being profitable. And the beautiful thing is, you can do that for free by paper trading or practicing. You don't have to come in with real money only to find out you didn't really know what you thought you knew.
That's such a great strategy too. To learn what you're dealing with before it puts you at any sort of risk or reward, so that you're going at it with the best potential knowledge and still having that backing from a coach. We're joined by Jason Brown from the Brown Report, joining us on today's edition of the Megacast. He's a stock market coach as well as an options trader. You can get in contact with him by sending an email to info@thebrownreport.com or calling 248 918 2909, 248 918 2909. And again, thebrownreport.com is his website. So Jason, let's go back on that a little bit and take a step back. For those that are either in the market already or are looking to get into the market, maybe are a little bit confused about how they should do that, how helpful is it to have a stock market coach, even if it's just to get them started and really learn what they're getting into?
So the thing about being a coach is, well, let's talk about just being in the stock market in general. People have a high emotion tied to their money. And so when you have a big emotion tied to your money, like if I lose this, my wife's going to be upset at me, or if I lose this, my husband's going to be upset, or um, I could have paid a bill with that money. Well, number one, you shouldn't be investing with money that you need to use to pay the bills. But typically, people put so much pressure on money, whether they win or make some or lose some. And so when you have a coach can come in and detach from your emotional relationship with money and help you see the charts and the strategies for what they are. And sometimes the answers are right in front of you, meaning the answer is you should buy right now or you should sell. But what we find in this industry is two emotions usually take over. Number one is fear, and number two is greed. You either fear you're going to be wrong, or you place a trade and you're right. And when you should take the profit and get out, you're getting greedy. Like, this is the one that's going to put my kids through college. And the coach can come in and kind of remind you of your game plan, remind you why that stock may be getting ready to turn around, and also coach you through, if you're going to hold on to it, here's how you could protect yourself so you don't give all your money back. If you think about most people who, lose money in the stock market, if you were to interview them or ask them, like, how, what happened, they would typically say like, I didn't see that coming, or I was so focused on how much I was going to lose, I froze or I got scared. And having that outside counsel and coaching can really help. And then more importantly, most people don't know the other strategies that are available to them. All they know is buy low, sell high. Well, if that's the only strategy you have, then you only make money when the market goes up. And we all know that the market can go sideways as well as down. And so that's 67% of the other ways that the market can move. Most people don't know how to capitalize on it.
We're joined by Jason Brown from the Brown Report, joining us on today's edition of the Megacast. TheBrownReport.com is his website for more information, to get in contact with him, and to go through some of his tutorials, as well as other information that will be helpful to you as you navigate the market. And as we talk about that, so many people, as we go into the fall and maybe going into a new job, maybe it's the first time that their employer is providing a matching 401k, or it's the first time that they're just investing in the market at all. Maybe they're fresh out of college and they're trying to start building right away for their financial future. What are some of those common mistakes that you see from people that either you coach, or just from observation and what you've learned over the years, among those that are just entering the market? And what's your advice for them to avoid some of those common mistakes?
Well, some of the common mistakes that I see, and I want to separate the two. There is investing with like a 401k, and then there's trading or taking, managing your own money. So if you're just getting a new job, or you've been on a job for a while, one of the most common mistakes I see is that people live so above their means that when a company comes along and offers a 401k, either A, they don't have the ability to deposit 10% or whatever the match is of their check, because they like need every penny of their money. And so that's a big mistake that I see. Or they say, I'm going to enroll later, and later ends up being 5 years, 10 years. And they're like, I never did it, I forgot. And you'll go back and look and say, had you been contributing mixed with the match that the company would have gave you, which is technically like free money, you would have had, 100%, 200% return by now. And there's no way to get that time back. So I would say sign up for it for day one, even if you believe that you need 100% of your paycheck. You'll be surprised at how you can finagle and deal with the money you have when it's already taken out before you get it, right? Like we all think like, I need every penny. But if they take 100 out of every paycheck and put it in the market, you'll somehow figure out how to live without that $100. So just trust me and try it and sign up and start depositing something. I think the second mistake that most people make is they think that the little amount of money that they have won't amount to anything, and they don't understand the power of compounding interest. They don't understand the power of the stock market. They don't understand the power of time. And sometimes people say, well, all I could contribute is $50. That's not going to turn into anything. But that 50 will start to snow. If you put 50 away every single month, at the end of the year, you'd have about $600. Doesn't seem like much until you look at the average return of the stock market is annually about 11 to 13% a year. So now at the end of 1 year, that $600 is now starting to make $60 a year. Plus you're still putting in $50, right? So next year you have 1,200. But now, if you're averaging 13%, you're making an extra $100+ a year. Not to mention if we have a market that's better return than 13%. So people don't give enough, I don't know, points or credence to what could happen once you get started small and how that can snowball into a big amount. Now, on the other side of taking control of their own investments, I think one of the biggest mistakes that people make is they see someone like me, or they watch, CNBC, and see the talking heads on there. And the mistake that they make is assuming that people are smart, or assuming that they are dumb, or that the people they're looking at are special and they're not. And it's not that anyone's dumb or smart or special or not. It's more about what information and experience do they have that I don't. And if you can get the same knowledge and information, you can trade or invest the same way that they do, because there's only one stock market. Warren Buffett can buy Apple. I can buy Apple. It's not like he has a special set of Apple shares that's only reserved for him. It's not like Elon Musk has a special set of Tesla shares. I can buy Tesla as well. And so once you realize there's no special stock market, but there is specialized knowledge. And once you get that same knowledge, you can get a similar result. I don't want to say the same result, because it depends on when they started investing, depends on their experience. but you can get some version of a result if you get that same knowledge. So don't make the mistake of thinking people are special or you're not as good as them.
You can get that knowledge, some of that knowledge, and a lot of help from Jason and his team at The Brown Report by visiting thebrownreport.com. Jason, thank you very much for joining us today.
I appreciate you having me on. Thank you.